Making your way in the world today takes everything you've got. Taking a break from all your worries sure would help a lot. Wouldn't you like to get away? Sometimes you wanna go where everybody knows.
Well, hello again. Now, I don't know about you, but I like being able to walk into a store, a business, a restaurant, a library, or wherever, and know the people there and have them know me. You know, kind of like that old Cheers atmosphere. Well, that's how we run our business. We have customers we count as friends, and a whole lot of others on a first-name basis with. We go back 20 to 30 years with some people. We've met some very good friends, I mean, almost family that way. We like it that way. It's more fun that way. We're also more effective that way. Now, here's some numbers that ought to tell you everything you need to know about our work ethics and how seriously we take doing a good job for our friends. Now, since 1984, we've been able to maintain less than a 4% turn down ratio. So what you say? Well, gee, just last year, the national number was 10 times that, or 40% turn down ratio. So when we say we're working to be your lender for life, we really mean it. We'd also like for you to think of us as one of your real estate resources. You don't have to be doing a loan with us to be able to call us and ask a question. Virtually any question. We'll be happy to hear from you. Well, you might have noticed I'm coming to you this week from a different location. That's not really important. What is important is the fact that I am sitting down. I was out doing some manly stuff last week, and that's right, you heard me right, manly stuff. When I fell off my high heels, stepped on a rock, slipped, I heard ripping, tearing, popping in my ankle. And that's not where you want to hear stuff. To keep from breaking my leg, I had to hurl myself off the edge of the Grand Chasm. Okay, it was a drainage ditch, but it was still a good ways down there, and it was rocky. So anyway, my ankle is toast for a few weeks. I'm on crutches, I can't drive, or I can't walk much. I can do all things alone, except for come out and see you. I can talk to people, I can take loan applications, I can dig up all the extra information that's needed to give the people the best loan they can. I can help get their credit scores raised. In other words, I can do everything except walk very much. Now, if you know me, you know that's going to be very hard on me. I like to move for everything I'm doing. So unless I'm busy, I'm going to be bored silly. So I need people who need mortgage loans. As a matter of fact, I need to be extra special busy or else I'm going to go bonkers. And by the way, there's not a thing I can do about that echo in here because I'm in a great big empty room. This week we're going to be talking about some changes coming your way in FHA and conventional loans, as well as telling you how to get rid of the mortgage insurance we talked about last week. There's a lot of changes coming down the pike in FHA, and you need to be able to start making plans now because there are some definite differences in how you're going to have to operate. Now, I see you eyeing these two stacks of files on my desk. This stack is from 2008, and this one is from 2011. Notice anything different about them? They both have the same number of files and similar types of files. This, better than anything I can say, illustrates the reason loans take more time now and are more complex. I really love the fact that this is the government's effort to reduce paperwork and make the loan process more transparent and easier for the consumer to understand. Now let's get into some more meaty real estate issues. Unfortunately, it's one of those good news, bad news things. So let's get the bad news out of the way so we can end up on a high note. FHA's got some issues. There's 6 things out there right now that could impact how you and I deal with FHA in the near future. First of all, they're tightening what it takes to become an FHA lender. At the same time, they're reducing lender autonomy. So any of those loans outside of that center sweet spot in there may have to start going to FHA for underwriting. That could add 2 to 3 weeks to processing times. FHA's also said they will reduce sellers' contributions. We don't know to what level. All we know is that sometime in the near future they'll be reducing how much the seller can pay for the buyer. Now, at the same time, appraisers are also dealing with the same issue. They want to know how to deal with that value in there. Now, there's no question the seller's contribution adds value in almost every case. 2 houses side by side, one paid by closing costs paid by the seller, one the buyer's got to pay his own. This is worth more. The buyer's going to pay more for it. The question becomes, how much is it worth? And the appraisers don't want to have to answer that question. they'd like a number. Now, a number's not going to work. Some areas it's worth every penny. Some other areas maybe going to get half the value. So we got to see how that's going to play out. Also, MIP is going to be going up. FHA is required by law to have a 2% cash reserves, and they're down to 0.24%. Now, FHA just raised the MIP ceiling to 1.55%, but we all said it'd never get there. Guess what? In the next month or so, it's going to get there. At the same time, they're working on upping that maximum to 2.05%. And when we reach that, they'll raise it again to 3% or 4% or so on and so on. We know what it'll go, but we just know it will go up. They're also working on raising the time to get an FHA loan after a foreclosure to 7 years instead of the present 3 years. It's really the strategic defaults that FHA is worried about. Now, conventional has a system that kind of split. They say strategic defaults get one time period and defaults for calls get a different one. But that's way too simple for Congress to come up with. To top it all off, FHA delinquencies are pretty near record highs. So that's causing some tightening outside all of these other things. But
somewhere over the rainbow,
and we're finally getting some options. Hallelujah. Conventional loans were the predominant loans pre-recession, but they cut way back due to the Fannie and Freddie issues. But mostly the issues were PMI. The big issue on our end, of course, was PMI requiring such high credit scores. Well, MI companies have been restructuring and managing their losses, and they're finally coming out of the hole, and they're very aggressively seeking new business. They've just announced they've dropped their credit score requirements by 60 to 80 points across the board. While they haven't dropped all the way back to 620 yet, it's coming. That means you can now get a 95% loan for a 640 to 680 score. And as we saw last week, conventional MI is quite a bit cheaper than FHA MIP. So the loan amount and the monthly payment be lower than if the buyer used FHA, which means it should make it easier to qualify for a loan.
Now here are 3 months worth of those coincident report maps put out by the feds. This will show you how the red is shrinking. Green is good and red is bad. The Coincident Indexes combine 4 state-level indicators to summarize current economic conditions to give a true indication of the health and economy of each state.
Now, aren't you glad you live in Texas and not in Detroit? According to Clear Capital, Detroit's numbers were so bad.
How bad were they?
They drug the whole nation's sales numbers down in the 4th quarter. The average price of homes in America dropped 1.6% due mostly to Detroit's numbers. 39 states showed a price improvement, 10 states stayed the same, and only 1 was down. Now, according to the National Association of Home Builders, the number of housing markets, metro areas, that have improved rose by 29 in February. Now there are 98 major metropolitan areas showing measurable improvement, and that's the 6th consecutive month we've seen improvements. David Crow, NAHB's chief economist, said, "This is a sign that a large cross-section of the country is starting to turn the corner as local economic conditions stabilize." The vice chairman of First American Title said, "This shows that momentum is building for a housing recovery and that more buyers and sellers are starting to feel confident enough to return to the market." Who knows? Maybe the Barrett-Jackson indicator is right and we'll see a large improvement this year, if the election doesn't get in the way.
Well, that wraps up this edition. Please share this video with your customers and colleagues.
And don't forget you can get daily updates and subscribe to this weekly video right over there.